Greetings, this is Jeff Scott, and welcome to my weekend market update. I titled this week, Will Former Support Become Resistance? I will either be posting this late on the 29th or early on the 30th. My email address is hgsidoc@gmail.com. Please note I record this in 4K. Give YouTube a chance for it to say HD. In the lower right-hand corner, there's a gear. In the remarks section, you can see a link to a download of a 4K video. And if you have any comments, questions, concerns, either email me at hgsidoc@gmail.com or leave a comment on YouTube. Let's go. The disclaimer, you can read through this, but basically this is for education purposes only. Anything I recommend should be taken in the spirit of education, not be considered investment advice. I'm a doctor, not a broker. I pay for the tools that I use, and trading involves risk, and you alone are solely responsible for any investment decisions you make. Let's just start very quickly by looking at the expected move chart in Thinkorswim. I find this chart to be so useful because it really tells me about the week that we just went through. So let's look at the major indexes very quickly. I'm looking at futures here, and remember this is calculated by taking the closing price of the prior week and then adding the cost of an at-the-money call and an at-the-money put. If you add them together, you get the green line. So if it goes above the green line and you bought the spread, you made money. If it goes down below the red line, you made money. And in between the green and the red, certainly one of your options will expire worthless, so the market maker made money, and then you'll split whatever's left of the remaining option. So you take this call and put purchase when you feel strongly that there's going to be an outsized move. Now, the ones that are pricing it are the option market makers, the smartest money in the bank, and they will price it so they win most of the time. When I've done back testing, it's supposed to be, I would think, 70, 75%, but they actually win 83% of the time. This week, you can learn a lot just from what happened with the S&P futures. On Monday, they opened and sold off hard, hitting a new low, which I now call the January 24th low. They came back with a big hammer and closed higher for the day, giving a green candle. That made me hopeful that we would see the market go up from there. We were disappointed Tuesday with the sell-off, still staying above the red line. Wednesday, a tease, opened up, traded up, and came back and closed up on the day, but just nominally. Thursday was a doji, and then Friday we had the big move, especially at the end of the day, closing near the highs. Now again, the option makers won because you're in between the green and the red. This is the S&P futures. Very quickly, the NASDAQ futures. You could see they traded down and lived along that red line until Friday, where they had a big move up and closed almost unchanged, just up a little bit on the week. The YMs, again, big bottoming tail on Monday, stayed within the range. The VIX, from the top to the bottom, but ended up in the range. So up to now, the market makers have won each of these. And lastly, so that wasn't the VIX, that was the RTY, I'm sorry. And you can see, unlike the others, it ended in the bottom half of its pattern. Here is the VIX, which ended up kind of where it opened. And the one that traded outside the range was the dollar, showing a lot of strength this week. Usually a strong dollar means tough week for me. Although my portfolio has changed so much over the last month, it's not necessarily true anymore. If we look underneath, long-term rates and short-term rates tilted higher. It's almost tilted because they barely budged, but they went up a teeny bit this week, and you can see the 10-year and the 30-year. At the AD lines, you can see in white is the AD lines on both the Russell 2000 on the left, Russell 1000 on the right, move down, although you're starting to see perhaps some slowing of the descent. I'm probably overreading that on the 1000. The Russell 2000, the small stocks, continue to dive lower, and there was a tick up on the Russell 1000. If I look at the breadth, despite the major averages, there was weakness. Stocks above the 200 dropped to 26%. Stocks above the 40 dropped to 20%. So if you think about it, most of the stocks, the 40-day is, well, you have the price of the stock, and the price is, instead of above the moving averages, on many of the stocks, majority of the stocks, price is below the 40, and in many cases, the 40 is even below the 200. Not a strong looking market. Now, last weekend I talked about the T2121, which is an indicator that looks at the 13-week new high, new lows. I mentioned when I get to this lowest point here, I almost always see a reversal, and we saw a reversal this week. And you could see the bounce here. Now I want to just point yourself back at the March 20, and then the 2019 and the 2018. Sometimes you get a sharp recovery, but if you look at the March 2020, we had multiple fits and stops here. So we'll see whether this means we're heading up or we're just bouncing around at a new area of consolidation. The daily McClellan bounced off of the expected area, didn't quite get down to the what we saw in December, and did not get quite as far down as the March bottom of 2020. Again, starting to get a complex picture here, and nothing says that we can't go down further and retest as we did back in March. If I look at the buckets, for those that are new to me, take the stocks of the S&P 1500, put Bollinger Bands on them, and first question is, what percentage of them are above or below their midline of their Bollinger Bands? 86%. That's decidedly bearish. And then what percent are in each of the 10 deciles between 0 to 10%, 10 to 20, so on and so forth, and then those that are below the bands and those are above. And you could see most of them are in the middle of the bottom half. Now, that is a huge improvement over a week ago when 90% were below their midline and 35% were underneath. Again, another signal last week that I expected a reversal. A secret is, just because you see a signal of a reversal doesn't mean you're going to get one. And if I show you 2008 and even last year in March, you could see you could get much worse than 35% below the Bollinger Bands. The Hindenburg Omen, one of my favorite signals, which gives me a hint of market problems to come. And you could see here that we haven't had a new Hindenburg on either the NASDAQ or the NYSE, that in early January we had several Hindenburgs fire on the NASDAQ. That's not classically what we look at. Typically we look at the NYSE. And the thing that I found most impressive was on Thursday before the reversal, 25% of the stocks in the NASDAQ had a new 52-week low, and you could see it was at 10% on the NYSE, and both those numbers improved. Market tone for one day actually looks good with some green to go with yellow, and we seem to have moved off the red. Interestingly, typically it takes a line of kahunas, big moves in the market for that to happen. We didn't see this. This yellow and brown here just tells me it's still a volatile market. Sector strength, you could see we went from mostly red to actually mostly green on Friday, which was just a crazy strong day. As far as this coming week goes, major news. Whenever you have a non-farm payrolls and monthly unemployment rate, there's going to be a lot of things that are going to happen on Friday that could dictate the market. We got jobless claims and PMIs, factory orders on Tuesday, Wednesday, ADP. Monday, we got some job openings, ISM. And then what probably will be important will be the Fed speakers on Monday. Prior to Powell's speech in the Fed meeting, they were talking up rate hikes. One wonders if they're now going to come in and temper that. And in my opinion, all they need, which doesn't mean anything, by the way, all they need to do is say they're data dependent, and I think the market will be calm. Lots of earnings this week. You should stop it here and look if you don't know if your stock's earnings are here, but UPS, Alphabet, AMD, AbbVie, one that we've talked about several times, Amazon and others. So it's a big week. And my quote in the lower right-hand corner, it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. Here are my thoughts. The Dow Jones average gained 1.3% this week as investors saw blue chips amid the heightened volatility. S&P 0.8 up, NASDAQ was flat, and the Russell fell 1%. The strong finish on Friday was clearly led by Apple, Visa, other stocks with earnings. What was interesting, not only was Apple up 7%, but it closed higher than its aftermarket move, which typically has been faded. The Fed's fund futures market began pricing in the probability for 5 rate hikes this year. On Friday, interestingly, the market did well. Bank of America came out and projected 7. Clearly, the risk of high inflation and the accommodative policy no longer seem appropriate, and the advanced Q4 GDP and PCE price index supported that case. Despite the comeback effort late in the week, the small cap Russell still closed more than 20% from its all-time high, thus it has entered bear market territory. Market year to date, you can see the Russell leads to the downside is -13, and close behind is the NASDAQ. Certainly a bifurcation between the large and the smaller caps, but even the Dow and the S&P are down 4 to 7%. We have another news and earnings-driven week this week with the monthly unemployment data that I pointed out. And considering the handicapping by the analysts of how many increases we should expect this year, any and all economic data will be scrutinized. Friday was certainly a great day for the bulls. That said, there are reasons to be cautious, including the fact that the S&P 500 has failed to close above its 200-day SMA despite probing it for the last 5 days. I'll show you that. We are teetering on a bear market based upon the Russell, and beware bear market rallies that can be ferocious. We have established support for now as the March 24 lows. Interestingly, the IWM did probe those lows on Friday before the rally. I will look for those lows to hold. If not, holding long positions is ill-advised. A decisive break above the 200-day by the SPY would be a sign that I might get more active in the long side, especially if it survives a retest. There are times to be aggressive in the markets and times to be careful. To me, this is the latter. Taking a couple small positions to test might make sense, especially if the markets are up again on Monday. That said, considering ongoing COVID concerns, inflation, Fed tightening, balance sheet reductions, and reduction of QE, the prudent investor should consider caution. A failure of the spider at its 200-day SMA might present new opportunities for shorting. All right. I kept that to 12 minutes. I want to get it a little bit shorter, but I had several comments from people that wanted me to keep that going. Let's take a look at the markets. I just want to show you something in TradeStation. Those who followed me for a long time know that I've been using the Q indicators and a couple of other things, including the Roy Kelly cycle indicators. I'm not putting this here telling you need to go out and get them, although I'm very fond of them, but rather to show you that we had, these are daily futures, E-minis, NASDAQ, Dow, and the Russell. And on each of them, we had the stretch, and then on the Russell, a headwind as well as the stretch. So we've come off the highs quite a bit. We've also had the non-committed, meaning it doesn't have the red line drawn on the cycles yet, but we also have cycle lows. So we could be at a point that we could see a sustainable bounce. How will you know it's not a bear market? Well, to me, I'll talk about it, but getting above the 200-day and holding will make me feel better. If not, it's a bear market rally. And I think for right now, I've got to be concerned about bear market rallies. If I go into wealth charts today, and I look at from a top-down perspective, and I look at daily algo scores, we can see that the leadership on Friday, at least from the algo side, and from the returns, so you can see everything was up. In fact, some of the laggards, technology and healthcare, actually led. Now I can look at and see that from an algo perspective, energy, utilities, and communications are leading on the daily. On the weekly, I have to substitute communications for financial services. So why don't we do this? Why don't we look at energy, utilities, communication services, and financial? And I have set my default watch list to be my weekend review. Now when I hit compare, I bring up all the industry groups that are in those sectors. These are the sectors right here. And typically I'm going to go through the top bunch. So let me just hold that, put the shift key on. Let's bring it down to telecom services. So notice all these have been checked. Then I'm going to hit, let's see, where am I going to go here? 1 second. Here, and I'm going to bring up the stocks from those industry groups. And now you can see the stocks ranked by daily algo. And so since I think that we could be up this week, or at least starting the week after Friday. I'm going to look at the bullish case. I'm going to check down here. Let's go down to 750 and look at the stocks that had the highest algorithmic rating from wealth charts. See, again, they're all clicked, and now I can add it to my watch list, and we know it's going to go to the weekend review. So that's the first part of my top-down review. Then I go over to Wealth Scanner, and I go to all stocks, or all symbols, and in all symbols, I can start to look. I'm looking bullish, although I've been bearish for a while. I look at the bullish all symbols. I can go down here and add whichever ones I want to add. So General Mills looks interesting, not my kind of stock, but it looks interesting. Exxon, I'm going to add a bunch of these. So I'm just adding them to my watch list. I'm in a hotel room, so I don't have the same speedy internet I have at home, so it takes a little longer. So I could add the best of these is one thing that I like to do. Adding a little bit of a bottoms-up approach, bringing in the highest quality. But the other thing that I can do is I could actually go down and look at this weekend review, and the program's going to rank them by that algorithmic score. Now, of course, if you look at some of these things that have the highest score, many of them are already gone too far. But Glaxo, for whatever reason, Big Pharma looked interesting this week, and perhaps Glaxo is setting up as an opportunity. I'm just looking through here. Schlumberger, the services stocks have been good, and you can take a look here at Schlumberger, and you can see Schlumberger is up near the high of his range. So I can look at the stocks by their algo score. I can look at them with various indicators we're going to get to. Now, the other thing I wanted to look at is I could actually, I've got what I call my top-down indices, a series of ETFs to give me a sense of what's working in the market and what's not. There it is. And we'll look at the bullish algo, and you can see that energy, commodities, gas, production, dollar, oil, interestingly gold. What's not working in the market is biotech. Boy, do I know that. Pharmaceuticals. High yield corporate bonds. That's interesting. And then a bunch of the ARCs. I didn't realize there was a thing called SARC, which is shorting the ARC. Found out about that this week. So I can get a sense of what's working, what's not working. I could also look at sectors. I could pull up my, somewhere in here I got my S&P sectors. It's right in front of my face, of course. And I could see energy, staples, financials. So it gives me a sense of what's leading the market. If I'm bullish, I might look there. If I was bearish, recognizing what's failing is over the longer term. And interesting, communications made it to the third on Friday, so maybe it's changing, but communications, industrials, and discretionary. I could also, if I was interested in countries, I have an ETF list of various countries that I could look at to get a sense of where in the world I might want to invest. And you can look at South Africa's leading, United Kingdom, and so on and so forth. So I can really sort the market in multiple different ways, get a sense of what's working and what's not working. Now, I've created that watch list, which we call Weekend Review. What do I do with that watch list? I could drop it into Wealth Finder during the day, and if I did Wealth Finder during the day, it would start to populate as these stocks start to do something. Now, these are algorithmic scores, and you know I'm not a day trader, but when things make it to the 4-hour, the daily, or the weekly, they're usually things that are moving in the right direction. It's one of the things I like about this tool. In fact, I actually have a dashboard, a Wealth Finder. Well, I'll throw in some of the stocks that I own or stocks that are on my large buy watch list and my shorter buy watch list. And obviously, I put this list together over the weekend because all these stocks look like they're on the long side. But I like to do that during the day to get a sense of what's working. So now I've got this weekend review. I might want to go and look at and see if I can find some stocks that look good right now. So I use my personal scanner called the CAT scanner. As some of you figured out, yes, I use medical names on all my little indicators when I can. And I'll pull up that weekend review. And with that weekend review, and I've set my filters here to look for stocks that are squeezing, that the multiple dots. The top dot in my dots is a big gap. The second one is big volume. The third one is a breakout, and the fourth one is momentum. So the more dots, the better. So I wanted stocks to have at least one dot. And I like the Bongo Weekly to be bullish because that tells me we're most likely in an uptrend. And hit apply. Now I don't have that many stocks in this watch list, so I'm going to start here and then broaden the list. So right away, and I don't know this stock, and it's a cheap stock, MARPS, but I like the fact that the daily and weekly Bongo are up, it's in a squeeze, and it's got a bullish EMS. So I can look at it. I'm going to go and look at it over on this one. It's easier, I think, to present it. So let me go over here. Sorry if I'm confusing. I wanted to leave my weekend review. Okay, so what do I see? I see a stock that has really gone nowhere, and that would be problematic. I see a shooting star here, also problematic. The circles are Rob's wealth signal, which is a great signal that he gives for free to annual members as long as you're subscribing. And the triangles are my EMS, early momentum signals. Here are my dots. And you could see on Thursday we had a volume, a breakout, and momentum. We were in a squeeze, and the PSAR reversed. All those things are very bullish, and combined with this signal, this makes this an interesting pattern. I don't usually buy $5 stocks, and for the most part it's been sideways. It's a marine petroleum trust, so I might look and see if it's some type of a royalty trust that might pay a significant dividend. If I open it up to my combo leaders list, or combo buy list, let me make sure, yep. This is a larger list of stocks that I find interesting, and I might look at which ones have a bullish signal. So I know on this list there are some things that I'm interested in. So let me show you a couple of them. Let's see. Well, if I look at the best stock that I have right now, and it's a holding I've had for a couple of weeks, it would be ZIN. ZIM, maybe it's ZIM. It's a maritime shipping. This one. This has been the leader of the shippers. Now, one of the things that I like in HGSI, besides its ease of use as well, is that it's got some fundamentals. And I just wanted to show you in HGSI, whoops, I hope I didn't lose my sound. So I'm going to go up here, look at this, and look at the earnings per share growth on ZIM over the next 2 quarters. Gigantic. Look at its multiple, pays a 3.8% dividend, and it's under demand, 3.7%. So I really like that, and it's breaking out here from the prior highs. I can look at a weekly chart here as well, and you can see one that it's an IPO, and that means if I go and look at my bongos, I only have 2. It hasn't been long enough to have a monthly bongo. I look down here, it's not been around 200 days to have the high-low jump. The relative strength is performing better than the spider, which is good. Its volume is kind of sideways. It also had a new triangle here, and it had volume and a breakout. So ZIM is one I like. Within that category, SBLK is another one. I own this one as well. It's not as impressive of the former, but it too looks like it's getting ready to break out. And you'll see similar patterns in what I like. I like to see my EMS indicator. Interestingly, it broke above the prior sell signal on the wealth signal. It's got some dots in here. Relative strength is positive. And I like this one. And the other one in this setting, CMRE, I think. Let's see. Customary. There's a whole host of them. I'm trying to remember some of the others, but the shippers were ones that I found to be interesting. What else do I like? Go down here and switch to my buy watch of the ones that I thought were interesting. Now, a buy watch is just a watch list. I have no idea what the market's going to do on Monday. Neither do you. So the last thing I'm going to tell you is I'm going to buy these stocks. No, I put together a stock list so I could go into my Wealth Finder and have the stocks I'm most interested in here, looking to see which ones are moving. Again, I'm not necessarily buying any of them. I'm certainly not buying all of them, but I need to have something to look at. So if we look at Apple, Apple broke out on Friday on great earnings. I think there's a good chance that Apple has a chance to go and assault that prior high at 182. So you had a big gap up. It's certainly modeled on the Morales and Catcher Bible gap up, but I put a couple of filters in to ignore certain stocks that it turns out over my period of trading, gap ups I don't like to trade, meaning they close at the bottom of their range. But the big gap up, the big volume, the breakout, the momentum, it wasn't in a squeeze. This was an earnings-driven run. The relative strength turned positive, and again, that kind of momentum would not surprise me to go and assault prior highs. AbbVie is one that I got into with some people that have watched me. We got into it back here, got into it again over here in December, and it looks like after a short base it's ready to run again. That's certainly been a leader. As I mentioned before, pharma showed up. Also, asset managers showed up this time. Here is Blackstone. Again, all these guys are very much down in their pattern. I did have a new EMS indicator fire on Thursday, and I like this setup here. Again, post-earnings. Here's CF, a agricultural chemical stock, fertilizer stock that's been leading. I like this as well, coming out of a squeeze with momentum and a breakout and a positive EMS. There's just surprisingly a lot of nice patterns. This is customary. This is another one of the shippers that I like, CMRE. And I'd like to see the little triangle come in, the EMS, and I bet if we have an update on Monday, we'll see that. Some utilities started making it to my list as well, which tells you the defensive nature of the market. And this is Duke Energy. When I think utilities, I think stocks that may not be growing much, that pay a dividend. I don't really look at their earnings per share growth. But here's a dividend payer with a new EMS signal, a momentum and a breakout coming out of a squeeze. All three bongos are green with positive relative strength. That's Duke Energy. There's just so many of these stocks here. The energy stocks have been on fire. I've got several in my portfolio. I have a tendency to not go back and talk about those on these reviews because they don't end up in my buy watch list if I have too many already. Here's Marathon breaking out. Just with the weekly, you can see breaking out pretty much to new highs. Marathon Oil Corporation, that's one to like. And then Vivo is a life sciences company that I thought looked interesting. Got to sort this thing out here because it had a negative EMS when it had a positive EMS on Thursday. But when I look at this, it has 3 dots. I only count the dots above the squeeze. So coming out of the squeeze on Friday, it had a volume breakout and momentum coming out of a squeeze with good relative strength. Meridian Biosciences or something like that. All right, so these are some of the stocks that I liked. I think the most important thing is to keep in mind that this is a challenging market. Now, a couple comments about the platform wealth charts. I've just touched the surface. Rob Hoffman has a couple of programs that I purchased. One is called the TRP scanner, TRP system, which is a buy-sell system that a lot of people like because not only does it tell you when to buy them, but it gives you stops, targets, etc. And it will tell you which ones are new bulls. I like to look at my buy watch list and get a sense of how many of them actually made it to the list. So several of them. All right. He has an ITP system, a number of things that you can look at. Dr. K's got some great stuff, and some other educators as well. The other thing that is interesting is seasonality, and they have a different way of approaching it here, and I just want to comment on this. Folks who've been following me for a long time know that I like seasonality. You can look at, let's pull up my watch list. I don't want to add it, I want to look at my watch list. Let's look at the buy watch and just see if there's anything that has good seasonality here. And let's look out the next 4 weeks, and we've got 10 seasons worth of data, and we could see the projected return over the 4-week period of time. Here are the wealth scores. So here's a stock, American Express, that's got a pretty high wealth score and a good return, 4%, 1% a week. Let's click on it. And what's really cool is that my interest would be to understand for the next 4 weeks. So let's just look at, set this one here at, I should know the date because there's a special date that's coming up next week. I set it on where we're at, which is February 1st. And let's take, well, we're almost at February 1st, and this is a weekly. So I got to set it on the coming week. And let's set it up to April 1st, or April 5th. So it tells me that in this month-long period, it's up 7 out of 10 times. If I move this over to, say, here, 9 out of 10 times between February 1st and March 8th. Average return is 6.14% profit. The max was 24. One loss was pretty big at 16%, which was shocker in 2020. So there's built-in seasonality here. I like that as well. So there's a lot of things to like here. And then just to quickly review the markets, I'm sort of doing this backwards, but I talked about the major indexes. Here's the 200-day moving average. There's 4 times that the spider probed it and failed. This is the January 21st reversal low, 24th. Here is, you notice on each of these the red dots, meaning that the wealth signal is a sell signal. Qs, the diamonds, the IWM is certainly the one that's been beaten up the most. It actually dropped below that prior low and then rallied, so it hasn't truthfully broke it. VIX traded up and came back. The dollar's been super strong. No surprise, as we've been talking about for a while. Let's look at market theme. IWB versus IWM. Large caps have been leading. One thing that changed this week is the growth stocks actually peaked up some. Maybe we saw that with some of the performance of FANG on Friday. Other than that, I think I've shown you enough today in some of the power of this tool. I use all the tools that I've had before. I've added wealth charts as sort of the next thing in my closet of tools, my desktop of tools. And I think the algo and some of the scanning and the fact that I could bring in intraday, not just end of day, with some of my signals I like to use, makes this an attractive platform. So on that note, I'm going to say good night. You all have a great rest of the weekend, and thank you.